Welcome to Module 5. In this session, we'll be focusing on the final but crucial step in tax preparation, which is reviewing and filing. Filing a client's return is a big deal, but before you hit the submit button, reviewing the return for accuracy is critical. Mistakes can cost you time and money, so let's go through everything you need to know to ensure your tax return is both accurate and compliant. Why is it so important to review your client's return before filing? Even a small mistake can lead to a big problem like penalties, delayed refunds, or even an audit. Common errors include entering the wrong Social Security number, missing income sources, or forgetting to claim deductions and credits that your client is entitled to. By taking the time to really carefully review your return, you can avoid these pitfalls and ensure everything is in order. Another great thing about our software is even if there are mistakes, the IRS will reject it, send it back to you electronically, and you will have the opportunity to correct it. Okay, so before we get into the meat and potatoes on that topic, let's talk about how tax payments work. I did forget to mention this in the income module of how tax payments work. So I want to make sure I mention it here. What are the different ways our taxes are paid? Most people pay their taxes through withholdings. That's the amount taken out of each paycheck by the employer for federal and state taxes. Self employed individuals, however, need to pay their estimated taxes quarterly because they don't have an employer to withhold taxes for them. If there's still taxes owed after withholding or estimated payments, the remaining balance is due when the tax return is filed. For self employed individuals, it is very important to make sure estimated tax payments are paid throughout the year. These payments are due quarterly, and failing to make them can result in penalties. The IRS expects self employed people to pay taxes as they go, even though they aren't receiving a regular paycheck. If your self employed client owes, it is important to let them know to make payments on time and avoid these penalties. Okay, now let's get into reviewing. When reviewing a tax return, follow a step by step process. Start by verifying personal information like social security numbers and addresses. If this information is wrong, it can delay the taxpayer's refund. Next, double check all income entries, making sure wages, interest, dividends, and any additional income are correctly reported. Finally, carefully review deductions and credits to ensure you've claimed everything you qualify for. This process may seem tedious, but it's the best way to catch errors before they turn into something bigger. You don't have to review your return alone. There are tools available to help. Our tax software has built in error checks that will automatically flag missing and inconsistent information. The IRS also provides detailed instructions for each tax form, which can guide you as you review. And don't underestimate the power of second set of eyes. Having us as a community look over your return can help catch errors you might miss. Now that the return is almost ready, it's time to address any tax payments or refunds. If your client owes taxes, remind them of the due date April 15th and how they can pay. Options include electronic funds transfer, checks, or credit cards. If they're due for a refund, confirm how they'd like to receive it. Direct deposit is the fastest method, but some people might prefer a paper check. When it comes to filing, most clients will prefer e filing for a direct deposit. It's faster, more efficient, and you'll get automatic confirmation from the IRS that they have received your return. Processing times for refunds are also quick. It could be up to 21 days. However, there are times when paper filing is necessary, such as when certain forms aren't supported for e filing or if the client prefers this method. But keep in mind that paper filing takes longer to process. In addition, clients may opt to use bank products, especially if they want to cover tax preparation fees through their refund. A refund transfer allows the client to pay for services directly from their refund so they don't have to pay out of pocket. There's also the option for refund advance loans, which gives the client a portion of their refund upfront before the IRS processes the return. These products offer added flexibility for your clients who may need immediate access to funds. Sometimes, even after filing, mistakes can come to light. If that happens, don't worry. There's a way to fix it by filing an amended tax return using Form 1040X. Common reasons for amending a return include missing income, claiming additional deductions or credits, or correcting the filing status. It's important to address any issues quickly to avoid additional penalties. As we conclude this module, remember that reviewing and filing are the final yet essential steps in tax preparation. By taking the time to carefully review, file correctly, and track your submission, you're ensuring that everything is handled with precision and accuracy. In our final module, we'll dive into what happens post filing, from keeping your record safe to managing audits. Thank you for your attention, and I look forward to seeing you in the next session.